Today, Ben and I are going to be breaking down the September WASDE report, along with an oilseed report and maybe some Fed discussion as well. Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. Ben, how's it going?
I'm doing well. We finally got a little bit of rain yesterday, just a trace, but it was big fat drop, so we'll take it.
Well, I think we got something kind of similar here overnight down in Texas. A lot of cloud coverage and just a little bit of rain to show for it, but a little bit is better than nada. So, it is what it is. But talking about just slight benefits, we did see some slight benefits come into the market in some key areas, but overall, relatively flat week over week across a lot of commodities. So, Ben, let me give a rundown on prices here. December 24 corn up 3 cents at 4.10. December 25 up 3 cents at 4.48. November 24 soybeans down 14 cents at 10.04. November 25 soybeans down 6 cents at 10.57. That December soybean oil contract down 1.37 cents at 39.11. Soybean meal on the short ton for December up $1.20 at $323.80. That 2024 December wheat crop up 10 cents at 5.78. December 2024 cotton up 5.13 cents at 72.82. Then that West Texas Intermediate Crude Oil contract up $1.25 at $70.10. So, Ben, a lot of light gains and then some other light losses. What's your overall take looking at the market coming into this week?
Well, so that's a good question. So I think in simple terms, I remain a little bit nervous about, I think, some of our commodity markets. I think the big yields that we're seeing in corn could continue to push, be a headwind for our markets as we look ahead, even though we've seen a little bit of a rally here in that complex. And so I guess I don't have a general theme this week. Is maybe why I'm stumbling a little bit here. Is it's hard to understand exactly what's happening, and maybe we're just trending sideways in all these markets here for the short run.
Well, Ben, if you and I, if we had a perfect understanding of the markets, we'd probably be
That's
doing
right.
quality trading and making millions of dollars. But looking at some of the market moving factors, some of the news items that we saw, we got an interesting update from the September WASDE. That's USDA's global ag supply and demand estimates. It reflected a larger corn yield estimates and some other shifts there. So, what's the key takeaway from this September report? What do you think is the thing that people hung their hats on?
Well, so the big surprise, or at least the big ticket items that people were looking for, and I think were a little bit of a surprise, were on the corn production and corn yield estimates. So corn yield coming in, as you mentioned, above pre-report expectations and even above last month at 183.6 bushels to the acre. The highest trade estimate, or the most bearish trade estimate, was 183.5. So again, above all trade estimates there. If you account for the harvested acreage and we look at production, we're looking at almost a 15.2 billion bushel crop. That was 110 million bushels above the average trade estimate for the week. So, that was, I think, the kind of the one that caught people's eye because there was so much attention looking at those yield estimates. Soybean was left flat. That one didn't necessarily surprise me much because I think this crop is still growing. We'll learn more about it in the weeks ahead, especially as we get to October. I think we'll have a better idea. If I could put one thing out there, the thing that probably surprised me the most that didn't get much attention was USDA left the new crop soybean season average price at $10.80 per bushel. That continues to be a surprise to me, given the current U.S. numbers. That seems high. Looking at the current futures market, and I'm checking real quick just to make sure, none of our futures markets out for the next year are trading above 1070 even. 1066 is the highest for next August. So we assume, somewhat of a negative basis. And so now we're starting to talk about that season average price, and it just 80 seems very high for me. My personal number has been down closer to $10 to even below $10 for the current or for the 24-25 marketing year. So I think that was the big surprise to me, just given the numbers. We also have a very large global soybean supply.
Yeah.
So if we look at global soybean stocks to use, just a small tick below the all-time record set during 2018, 2019, when we had African swine fever in China and some trade conflicts. So
Well, Ben, I feel like producers looking at trying to turn a profit in this market are obviously in a very uncomfortable spot. But at what point, looking at how far out some of these depressed prices could stick around, at what point are there difficult conversations that have to be done as far as changing how, different farms are operating in order to at least minimize a loss, if not try to get back into the green side?
yeah, this is a good question. So a lot of farms had healthy working capital. We burnt through a lot of that working capital here this summer, this year in 2024. It's going to continue to put a pinch and strain on producers in 2025, and that will probably impact how producers operate, both in terms of the quantity of inputs put on, also just kind of some of their in-season management decisions as well. So those conversations were had here in 2024, especially on the back end of the 24 growing season, and they'll certainly be in place for 2025 as well. It largely comes down to thinking about the financial risk that can be absorbed by an operation. We talk a lot about this. Soybeans are a cheaper crop to put in. There's less financial risk on soybeans, and so do people start to favor a little bit more soybean acreage, even though the fundamentals for soybean aren't very good either.
Yeah. Well, looking at some maybe bright spots within soybeans, we have refreshed NOPA report numbers. That's the soybean crush numbers, and the NOPA members crushed 158 million bushels of soybeans in August. That was below trade estimates. Well, I guess not really a bright spot. That was the lowest number coming since 2021. So Ben, we've seen relatively strong crush numbers up until these new numbers were released. What really led to that massive drop off, I guess, and those kind of comparative estimates year over year?
Yeah, I was gonna question
I
your
was like,
bright
well, I'm trying to find
I was
bright
like,
spots. All right, even if I have to fabricate them, we got to find a bright
yeah,
spot in this
I
market.
was like, yeah, Will, I don't know about that. Yeah, so soybean crush has been the bright and shiny spot all year. Pretty much, I think it looks like 9 out of our 12 months for the 23-24 marketing year all were monthly records. And so, that has been a very bright spot for soybean demand. The August report was very bearish, and a couple of reasons why August tends to be a little bit of a wild card. We tend to see plants take maintenance during this period. Beans are hard to come by during that period. Harvest hasn't started yet. We've exported pretty much everything we had. Of course, you don't store beans as long as you do corn generally either, just due to the oil makeup of the product. And so usually we do see maintenance. There was a kind of a general sense or thought that some of these plants took maintenance back this summer when we had the flooding and plants couldn't operate. They couldn't get product away from the facilities, and so there was a theory that maintenance could have happened then. What appears to have happened is that not only did they take maintenance, but they took it for a longer period of time. And so it was a very bearish report. Of course, the soybean complex as a whole is very complex, because when you have a bearish soybean crush number, that creates a bullish estimate for both soybean meal and soybean oil, right? Because you've produced less of it. And so in some ways, the soybean meal and soybean oil market kept or pulled the soybean complex higher, even in the face of a very bearish, very concerning NOPA soybean report for
There you
August.
go. That's the bright spot. No.
Yeah. The soybean oil, soybean meal prices moved a little bit higher. So, this was, to put this into context, this was a 35-month low in soybean crush all the way back to September of 2021. So,
Yeah, well, it's almost one of those things that kind of makes sense. I mean, if you don't dig too deeply, just like seeing 9 out of 12 months record, setting months, and then whenever there is a halt, there's a big one. Looking ahead to the rest of this week, we have the Federal Reserve meeting once again, looking at interest rates once again. Ben, is there going to be anything that of interest really come out of these meetings, do you think? Or really, who knows, I guess?
Well, I think everybody's in agreement that the Federal Reserve is going to cut interest rates this month. We could argue whether they should. Should is a value judgment. But the market is convinced that the Federal Reserve Open Market Committee is going to cut rates. I think the big question and the big uncertainty still out there is it a 25 basis point decline or is it a 50 basis point decline? The market has started trading higher odds of a 50 basis point decline. We'll know on Wednesday afternoon what the answer is here. I sit here and say the broader market continues to show us strength, right? And the stock market yesterday, both on the Dow and the S&P 500, set new all-time records. We've seen inflation kind of move its way down or move its way lower. So there's a potential reason why the Fed wants to cut interest rates to help support kind of the general price picture. But I gotta tell you, like I feel like this market is setting up to where it's primed that an overly aggressive cut in interest rates could reignite inflation within the economy, and so I guess I don't know what's going to happen, right? Like I don't know if they're going to do 50 points or 25 points, but it certainly is suggesting that for the first time since all the way back in March of 2020, we're going to see an interest rate cut.
It feels like trying to start a fire with diesel on your hands. Potentially, you got to be really careful.
Yeah, and I mean on the other side of this coin, there's people, and certainly the news has talked about interest rate cuts being a positive thing, and the stock market views interest rate cuts as a positive thing, and for us as consumers, like trying to buy houses and cars and stuff, lower interest rates allows us to go out and buy those products cheaper. Mortgage rates continue to fall, kind of on this expectation that interest rates are going to fall as well. So long story short, I just put this all out there to say that we have to be a little bit, careful that consumer sentiment and the money on hand doesn't reignite inflation here.
Ben, are you trying to buy a house soon? Is that what you're trying to say?
No, I have my house. I have a good interest rate. I have a house, which makes me, like I'm not the one sitting in the picture of needing lower interest rates for a house market here. So that's my bias.
All right. Well, looking to the rest of this week, what should farmers and ranchers be paying attention to?
So not as big of a week as it was this last week. I feel like we had all sorts of things come out this week. We do have, the Federal Reserve announcement Wednesday afternoon about interest rate cuts. That'll be a big thing on the week. Our sister program for the livestock markets, they have a cattle on feed report Friday afternoon. It'll be interesting to see what's starting to play out in the cattle market. So that's kind of a big thing. And then next Monday, we do have cotton ginnings. Outside of that, all of our normal reports for the week.
All right. Well, Ben, it's always a pleasure to have your knowledge and information here on the program. Viewers and listeners, if you'd like to learn more about us and what we do, or our sister program, as Ben mentioned, the weekly livestock market update, you can do so at brownfieldagnews.com. Ben, thanks again. I'm Will Robinson on Brownfield.